welcome.
Today we are here to critically assess the contribution of the auditing profession to the UK economy. And my name is Jessica.
And my name's Lisa. Auditing is an inspection of a firm's financial statements to validate that the accounting records it represents are true and fair of the firm's transactions. Starting with the history, auditing dates back to 3000 BC when the ancient Sumerians essentially created a new accounting language.
Auditing became increasingly popular during the 19th century in the Industrial Revolution as several limited liability companies started to emerge, causing a separation between the owners and the company. Of course, the assistance of auditors was required to verify that all was in order, instilling the fair and true concept.
It became quite popular indeed. Directors were and are legally required to produce annual accounts under the Companies Act of 2006. As a result of this, the need for auditors to review accounts and catch irregularities became quite apparent. All in all, I think it would be fair to say the role of auditing adds a sense of comfort to the firm as their accounts are more reliable.
So, moving on to the economic impacts and importance of auditing. There is a clear relationship between the development of a country and the extent to which it practices auditing. For instance, in developing countries, professional services aren't really an industry. However, in developed countries like the UK, professional services are the backbone and can almost be deemed to be the driving force of the economy.
It promotes widespread investment, which in turn promotes both business development and employment. Company law requires audits for the good of the public. Governments ensure that audit firms continue to serve the public interest in efficient markets and continue to reassure the public.
Even after 2008, investors became anxious and uncertain about the future of firms. Thus, this leads to a decrease of the availability of capital in the long term. Therefore, increasing the quality of audits is crucial to encourage the investors and their confidence. Audits can also provide a signal for intervention by relevant bodies when they identify an apparent risk in the sector and provide further evidence as to whether a firm remains as a going concern.
Audits may also be capable of fraud detection. Although this is not its primary function, it can be a valuable part of promoting a safer and fairer business world in society with more equal participation in the economy. They can help identify cases of, for instance, tax evasion and mistreatment of suppliers. Next up, we have the cost of auditing. At first glance, the costs are direct and indirect cost, opportunity cost and time. Direct and indirect costs would generally be the salaries, the payment for the services, cost of training and cost to run these financial service firms. Here are some examples of the hefty prices firms pay for the audit services. Tesco paid £6.5 million to Deloitte in audit services in 2016.
Unilever paid £18 million to KPMG in 2014.
PwC charged HSBC £53 million in 2012, Barclays £44 million in 2013, and BP paid £41 million to EY just last year.
It's clear that audit services cost quite a lot. Fortunately for small firms, they are able to decide for themselves whether or not to have an audit due to the small companies' exemptions.
According to Section 477 of Companies Act, the conditions are: the company must qualify as a small company in relation to that year, the turnover in that year must not be more than 5.6 million, and the balance sheet total for that year must not be more than 2.8 million.
Okay, the SME's exemption criteria includes maximum of 50 employees, 10 million in revenues, and 6.2 million in assets.
These costs that small firms save on audit services can be used for other things. This is what we call alternative choices, which may have been foregone if they choose to pay for audit services instead. Opportunity cost refers to a benefit that one could have received but gave up to take another course of action. The opportunity cost of auditing can be extremely large for some firms. As previously mentioned, these millions could be used towards reinvesting their company.
A cost which not everyone considers is the time it takes for auditors to complete the job. This links with the expenses of the service, as the more difficult and laborious the audit, the more expensive.
There are non-financial aspects to consider as well, especially when considering the true relevance for auditing. Audit reports are based on historical data, and by the time they are published, it may not reflect the current position of the company and have little use to end economic users. Sometimes annual reports can be published up to 90 days after the company's year end.
Based on the NYSE index data, duration of holding periods of investors was around 7 years in 1940. By the turn of the century, it had fallen to below 1 year. It was around 7 months by 2007, raising the question of how much investors really rely on annually audited reports,
True.
as investors are acquiring and selling stocks without professional assurance or updated outlook. Now we will discuss the indirect contributions auditing has on the economy.
The process of becoming a qualified auditor requires professional training and examinations. These are pivotal to the audit industry and the UK economy, as they develop and shape the skills and knowledge of future auditors who may become leaders to large organisations, either in practice or industry. 25% of FTSE 100 CEOs and 56% of finance directors are registered accountants. This highlights the skilled labour audit creates. In the top few financial firms, the auditing sector contributed around 2.27 billion to the global economy in 2016. PwC contributed 1.24 billion, KPMG 262 million, Ernst & Young 619 million and BDO 143 million. This led to the growth of the financial industry within that year and subsequently the whole UK economy. The audit industry has also had negative impacts. For example, the 2008 recession was an indication of the severity poor auditing services can have on the UK economy.
The House of Lords scrutinises the Big Four accountancy firms, indicating that auditors should have shown more diligence in forecasting the conditions of the banking industry. Although the auditors acted within the scope of their duties, the House of Lords said that auditors should have fiduciary duties to raise their concerns with regulatory bodies. Due to this scrutiny of the auditing profession's competency, the Accountancy and Actuarial Discipline Board opened investigations into 10 accounting firms, including PwC.
The scrutiny also brought the limitations of competition within the audit industry to light. Within the UK, the companies that drive majority of the UK's economic stability all reside within the FTSE 100. Current statistics show that all, barring two, use the audit services of the Big Four accountancy firms, and their audit engagement relationships can be in continuity for many years. For example, PwC was Barclays' auditor for 120 years.
This lack of competition has had some impacts on the economy, as it puts the industry into stagnation. In addition, long-running audit engagement can lead to the audit firm becoming lax in their investigations, resulting in gross errors, such as Tesco's 2004 material misstatement of £263 million that was missed or overlooked by PwC.
The EU audit reform was introduced to bring more competition and choice to the industry. However, there is the notion that although competition increases, choice is still limited, meaning the only thing the EU reform will achieve is a client merry-go-round between the Big Four firms, simply because mid-tier firms don't have the capability to breach into the FTSE 100 clients and handle audits of their magnitude.
Ernst & Young won the mandate from PwC to audit Royal Dutch Shell. PwC picked up the AstraZeneca audit from KPMG, while KPMG was hired as auditor by Travis Perkins, ending its relationship with Deloitte, and Deloitte picked up KPMG's audit client Admiral. The last topic of the day is the future of auditing. Auditing has been conducted the same for many years, but as the world innovates, auditing must also evolve. This means audit calls for greater transparency, greater understanding of risk, and more forward-looking view of the business.
Regulators continue to highlight the need for focusing on audit quality, evidence, and professional skepticism. This is why audits are no longer going to rely on samples of controls and systems, and instead use technology to inspect a broader scope of the company.
To explain that in further detail, auditors will use data analytics, new technology, and confidential information, all combined on their computers to help the auditors of the future. This also makes it easier to identify risks and issues in order to deliver additional insightful information.
This means genuinely higher quality of audits and subsequently increased confidence of investors and lenders in consumer products. This sounds great.
So, what happens to the EU audit reform, and how will future audits be affected?
That's a good question, Jess. Well, the head of audit strategy at PwC believes the implementation of the EU audit reform will be unchanged in the short term. And apparently, the UK regulatory framework will remain unchanged after the Brexit. This was confirmed by the revised FRC's ethical standard.
However, head of the UK audit at Ernst & Young believes the impending exit from the EU may put the audit committee to the ultimate test.
Really? Well, as far as auditors' jobs are concerned, situations like Brexit tend to signal opportunity for auditors. For instance, just the announcement of Brexit impacted a range of companies who will request the assistance of auditors and other professional services to navigate through Brexit. Each audit committee's members' agenda may have to determine whether the business is a going concern or not.
Also, if the company may have to borrow to fund operations, which may be the case for many companies if foreign shareholders withdraw, auditors will need to keep a close eye on these changes.
Very true. For example, HSBC stated publicly that if UK leave the EU, they would have to move about 1,000 of their employees to Paris. Financial statements will probably have so many changes following Brexit. This is additional workload for UK auditors.
Not only that, this additional workload will increase the cost of UK audits and thus increase the economic contribution provided by auditing firms.
Correct. So today, we have critically assessed the auditing profession's contribution to the UK economy.
Despite its drawbacks,
It's pretty fair to say that it's a vital part of the economy.
it provides reassurance to firms, governments and individuals.
It educates shareholders and adds credibility to financial statements.
And provides a great number of skilled labour to the workforce. Thank you for watching and don't forget to like and subscribe. Bye.